Bitcoin is a scarce digital asset. This is a new tech of which we can use blockchain for a whole bunch of different things. And they're reducing the balance sheet that's taking money out of the system. So it's a game of musical chairs.
Welcome back to Sucryptoz. In this video, we go over Raoul Pal's hottest takes on crypto, Bitcoin, and the overall economic state of the world. Where can the market be headed towards, and what can we expect from the coming months based on the current economic inflation?
Sucryptoz, your daily dose of the best crypto content. Up to date, trending news. Sucryptoz, what it do? Blockchain review. It's a bull run move. They the greatest. Check out Sucryptoz.com.
They say, Raoul, they say that, Bitcoin is like, this is the meme, right? Bitcoin is your hedge to inflation because, every time they print money, but Bitcoin is, there's just going to be 21 million Bitcoins ever. But the crypto market is so heavily correlated to the public markets that it kind of doesn't really serve that purpose anymore, which is, it almost feels like every time there is QE, Bitcoin goes up because isn't it like correlated to inflation, but not in like a hedged way?
Okay, let me explain it for your Indian audience. Why do Indians buy gold? So when you look at gold in rupee terms, it's gone up. What has the rupee done over the last 20 years? Gone down. Why? Because of inflation and central bank policy and those kind of things. Indians buy gold because it maintains their purchasing power over time. And it's worked astonishingly well. It's the same with crypto. What you're hedging here is not inflation, i.e. prices rising, which is usually demand or supply driven. What you're hedging is the debasement of currency, where your purchasing power goes down. So, okay, let's go back one step. What is Bitcoin? Bitcoin is a scarce digital asset, and we either choose to accept it or not, right? Like everything, like gold it's just a metal, but the meme says we should accept it as something of value. So Bitcoin is a meme that is the digital store of value. But it is also a technology. So if we think of Ethereum now and the rest of the crypto space, this is a new tech of which we can use blockchain for a whole bunch of different things. So what we've got is this scarce asset and technology. Okay, great. That's worth something. The other side of the equation is, as you mentioned before, these however many white dudes, aging white dudes in the United States, set the monetary policy for the world, essentially. That liquidity washes in and out of markets. So when it washes out of markets, as it is right now, they're raising interest rates and they're reducing the balance sheet that's taking money out of the system. So it's a game of musical chairs. So what happens is people are scrambling for dollars and both, you see currencies falling around the world, but also people can afford less assets because there's less leverage, less money around. So the price of Bitcoin, NASDAQ, everything falls. I mean, literally everything, house prices. And the dollar goes up because there's less dollars around.
That's what's happening right now.
That's happening right now. So if we go back to 2020, what happened was massive liquidity coming in, plus debasement of currencies, quantitative easing. Right now, we've got the opposite of debasing of currencies. We've got quantitative tightening. So the currency is actually getting stronger. So the assets should go down versus that. But back then, we had like a 50% increase in the Fed balance sheet. We've never seen that much monetary expansion in the modern history of the United States. And so what happens is you then look at all of the assets, and what did best out of that was Bitcoin, or all of crypto. Why? Because not only, so gold did okay and equities did well, but Bitcoin did really well because you had both the technology bet and the monetary bet. And so it outperformed. So if we're in an age when the central banks are straddled, the global economies are straddled with debt, and this doesn't apply to India as much as it applies to the Western developed nations, is their only answer is to print money to avoid catastrophe, because who pays the debt? So the central banks backstop it. So over time, they're going to keep doing this trick because it's a magic trick, because it makes asset prices go up and everyone looks like they're rich. But you're not rich. because you actually can't afford a house because it keeps going up in value because your wages don't go up. And the asset you need to own for all of that is crypto, because it's the thing that outperforms and gives you more purchasing power.
It's hedged to inflation because it's actually you're better off owning Bitcoin than your own currency. That's how it's a hedge.
Yes, but it's not inflation as in the rising cost of gasoline prices. It's to do with fixed asset inflation, houses, stock market, Rolex watches, and art, all of that stuff that's supposed to hold value, that goes up a lot when you debase the currency. All of these things with variable amounts, like your wages, don't go up, which is why the rich get richer because they own all the stuff, and the poor get poorer because they just get income. And income never goes up as much.
Raoul Pal is such a prominent figure and visionary in the financial space, so it's interesting to hear what his peers thought of when Raoul was first getting into Bitcoin, which was deemed a scam on its inception. Given the fact we can get a glimpse on how the big minds thought about such a currency in the early days, and how we can correlate that mindset nowadays.
When you first started openly speaking about crypto, did your peers give you a funny look like, hey, what are you talking about?
No. Interesting enough, my peers were like, okay, this is interesting, because macro people are curious by nature. They want to know what this is. Is this an opportunity for me? And I explained to people, listen, I said, I've done the maths here badly because I'm not a statistician. In fact, I failed all my stats classes. But if I look at the gold above ground supply and the known reserves and apply that to Bitcoin, so it's called a stock to flow. I said, I think Bitcoin's worth $1 million with gold at 1,300 at the time. I then also said, oh, and I'm also an idiot, so I'll discount myself by 90%. So let's assume 100 grand is fair value. And it was $200. So I'm like, this is the best reward any of us are ever going to see in our entire careers. And everyone got it. But that's my global macro investor audience. These are sophisticated investors. So cut to the first video on Real Vision when we mentioned Bitcoin, and it's like, it's a scam, it's ridiculous, you need to own gold. Remember, gold was at $1,300 back in 2012. And where is gold today? Just double checking. Gold today is $1,600. Bitcoin was at 200, and now Bitcoin today is at 20,000. But, oh God, on Real Vision, we got such pushback. You know, this is ridiculous. How dare you? But the macro guys, no, they kind of got
And
it.
how do the macro guys feel about?
Were your employees okay with it?
Employees, well, it was split. You know, there's a bunch of people who just didn't like it. And over time, you know, I've been, as you know, very strong on this. And over time, people have left Real Vision because they didn't share that vision. But, you know, I think it proved pretty well that macro and crypto are all different facets of the same thing. They're all, one is the future of money and the future of the financial system, and maybe the future of all business models. And the other one is the decaying system. And that kind of pessimism, optimism actually works really well. It gives you lots of opportunity sets.
I mean, you long the pessimism, which is the US dollar when everything is bad, and then you long optimism, which is like Bitcoin when everything is, when the flags go off again, right? And
Yeah, but don't
that's sort of
forget,
like
the
the
flags
hero
go off when
assets of
everything, but the flags go off when everything's really bad. So that's
Yeah.
why all the macro people are watching the bond markets fall apart, the economy, and everyone's slightly cheering because we know what comes next.
Yeah.
So now that Bitcoin is considered the internet's gold, Raoul Pal is questioned what is the biggest driver of Bitcoin and how the world may end up in a critical situation that asks for the crypto adoption.
Yeah,
Upward
so
trajectory.
Bitcoin, the largest driver of Bitcoin in the cycle. So if you think about that technology, that gives it this exponential uptrend. So if you put a logarithmic chart, it's actually pretty smooth. What are the cycles driven by? It's driven by liquidity. The biggest driver of Bitcoin is global liquidity, not just the Fed liquidity. So if you use the global bank balance sheets year on year, what you find is that's the thing. So China's already starting to print. The UK is starting to change. I think Europe will be pretty soon. So I think that all we need is a turn. The rate of change needs to turn and crypto turns, which is why, you know, ETH bottomed in June. It's been looking forwards, saying the cycle's turning. And I think it's right. So I think the cycle's turning, and it takes a while to play out. So people would call this crypto spring. You know, spring is a time where, you know, it rains a lot, it's cloudy a bit, sunny a bit, it's cold, it's warm. And that's exactly what the crypto market's like right now. It's just messy. But it's not really going down either. So it doesn't get colder every day. That's winter. So I think we're in crypto spring. And as liquidity changes, and I think that happens relatively soon because things are getting pretty ugly out there. It's inevitable because we as humans want it. We as humans understand some of the fragilities of the system. Humans' two strongest emotions are fear and greed. Crypto works for both of them. Fear is, I want to keep my money. I don't want it taken away and I don't want it debased and I don't trust you. And greed is, hey, this is a perfect behavioral economics incentive system where if we all participate in the network, the value of the network goes up. So this is a very powerful force. Imagine if Facebook, when it started, so Facebook works by giving you a bunch of free tools, monetizes your attention span, and the shareholders get rich and you kind of get abused, but you get the free tools. So it's a trade-off. Imagine if Facebook had given every single user free shares. You would have told everybody about it and would be passionate about it. That's all crypto is.
Next, Raoul Pal shares some important tips on investing when it comes to Indians, which anyone can take for themselves. It is well known that the best way to invest your money is to start early.
So, the average age of an Indian is 28 years old. Every single one of you is going to be investing. So the industry is going to boom. Now, India is also a leader in fintech. So you probably don't want to work for ICICI Bank or somebody like that because it's boring. But entrepreneurship and fintech, crypto, okay, this is where India excels. And everybody is going to invest. That's the only thing you need to know. The answer to every career is go into a secular bull market. Whatever it is, be in that. Do not go in like the fossil fuels industry. That's a secular bear market. The price might go up, but it's going to shrink over time. Go where the money's flowing. So when you've got a group of 28-year-olds of the size of the Indian population that all want to aspire to that vision of the future selves, to be wealthier than their parents and to have a house and do all of that stuff, they're all highly incentivized to invest. So that industry is a phenomenally good industry to get into over time. Asset management, fintech, all of that.
And that's all for today. If you enjoyed this video, please drop a like to help the YouTube algorithm share our content with our crypto enthusiasts just like you. If you want to watch the full interview, I will let the link in the Super Team podcast in the description below. Thanks for watching. The content of this video is for informational purposes only and should not be taken as investment advice. Please do your own research before investing in any cryptocurrency.